Everybody, welcome back to Controlling the Bull. Today we're going to go over pattern day trading. So, first things first, what is pattern day trading? So, pattern day trading refers to entering and exiting a stock position in a 24-hour period. So, let's say I buy a share of Coca-Cola today at 9 a.m. when market opens, and then I sell it before 4 p.m. when market closes. That would be considered a day trade. So, when and how can you day trade? So, day trades are very useful because, sometimes there'll be a certain catalyst, and a catalyst is something that may move a stock in a positive direction. Some examples of this could include something like an earnings report. Maybe they hit target sales or exceeding expectations. So, the market is very bullish on that particular stock, or in other terms, they're willing to risk their money thinking that the stock is going to go up. Okay. Now, you're only allowed to complete 3 day trades within a 5 day business period. Okay. So, Monday through Fridays are when the stock market is open. Now, there are some holiday exceptions to that, of course. So, you're only allowed to day trade 3 times within 5 business days. And then once that 5 days has been completed, your day trades will reload back into your account and you'll have 3 more to start again after that time period. Now, day trading only applies, and there's only a pattern day trading rule for accounts that are under $25,000 total in their account. Now, most new traders and most people coming to this channel are more than likely starting off with less than $25,000 in their account. Now, it's also important to mention that the pattern day trading rule, or PDT, only applies to margin accounts. Okay, so there are some ways to bypass the limitations that day trading puts on you. All right, so how to hack the pattern day trading rule. So the biggest way to really get over this hump and hack the system is signing up with multiple brokers. So, there's many to choose from. You got Charles Schwab, TD Ameritrade, Webull, Robinhood, Moomoo. There's so many different brokers out there these days. Now, when you sign up with multiple brokers, it's going to spread out your cash maybe a little thin. However, you'll be able to do 3 day trades for each broker that you're on. So that could easily multiply how many you're able to do in a business trading week. Now, you could also convert your account to a cash account. Now, there are some pros and cons that I have listed up here for you on the screen. So, in a nutshell, if you have one broker, 3 day trades per 5 business days. If you have two, that's going to multiply to 6. If you have three, that's going to multiply to 9, and so forth. Now, with cash accounts, you can switch your account to a cash account at any time period, and you don't need more than $25,000 to do so. And you will be able to do unlimited day trades. However, your funds will take an increasingly high amount of time to settle as opposed to being a margin account. So, me personally, I don't find it beneficial at all to switch over to a cash account. And the main reason for that is, yeah, I could do more day trades, but if I'm under $25,000, I need that buying power back as soon as possible so that I can play more positions for the week. Whether that be a day trade, or if I'm swing trading, position trading, whatever kind of trading it may be, I need those funds back in my account ASAP. And with the cash account, that's just not going to happen. So for me, I personally find that one the least amount useful. Now, if you're close to $15,000, $20,000, and you're edging towards, not having to worry about the pattern day trading rule as is because you're about to hit that threshold anyways, then yeah, I would say a cash account is worth it. But if you're like, let's say $5,000 or less, even $10,000 or less, I really don't find the cash account to be beneficial at all. With margin accounts, your funds are going to settle immediately. So I think the best way to play this strategy is to take advantage of having multiple brokers. The only downside is your cash is going to be set, spread kind of thin. So you may only have $3,000 to invest and you put 1,000 in each broker. Well, then you can have 9 day trades per week, but the amount that you'll be able to put on a position or how many shares you're able to buy will be also stunted by having your money spread thin across different brokers. So you want to keep that in mind as well when implementing your strategies. So here's a little quote from Richard Branson. Business opportunities are like buses. There's always another one coming. So today I was trading on a stock that went up 40%. I got out probably around like a 10% upside, and I was a little bit bummed out at first that I missed out on a higher potential return back. But you got to keep in the back of your mind, hey, there's always another trade, there's always another opportunity. So don't get discouraged if you didn't make as much earnings as you would have liked to, or if you sold out on a position too early and you got kind of scared in the trade and you let your emotions get the best of you. That's where we need to kind of reel things back and try to really work on controlling the bull. Controlling the bull just means controlling your emotions. Think logically, trade off data analysis, news, catalysts, all those things. Looking at the channel, the volume, the SMA lines, all these things. We'll go into further details about all that, but I just want to make this video, very general and very easy to digest for everybody, for those new traders out there. So in summary, pattern day trading again refers to entering and exiting a position in a 24-hour period. Accounts under $25,000 can only day trade 3 times in a 5-day business period of time. You can hack this rule by having either more than $25,000 in your account, changing your account from a margin account to a cash account, or you could sign up for multiple brokers online, which again I find to be the most beneficial. I'll have some free stocks for you guys to be able to get, whether you use Robinhood or Webull. I'll put my links down below in the description of YouTube for you guys. Hey, it helps me out. I get a couple free stocks, and you can get up to anywhere from 5 to 10 free stocks, valuing anywhere from $2 all the way up to $2,000. So the great thing about using one of these links, whether you use mine or somebody else's, or you want to start referring friends, it's a fantastic way to get passive income, because all that the broker is requiring of you is that you make a deposit. So I'm going to deposit maybe $100, right? Or 50, whatever it may be. Now, I don't have to invest that money. I don't have to, risk that money whatsoever. I just have to make a deposit. Once I get my free stocks, I could actually withdraw those funds out, which is another hack that a lot of these broker sites don't want you knowing, but it's a great way to earn passive income. You figure if each stock is only, $5, you get 5 free stocks. Hey, that's $25 richer than you were a moment before this. So good luck to you guys. Make sure you get your free stocks. Thanks for watching the video, and I can't wait to catch you next time.